Hello to everyone. Today I am here with Come with Business Idea Part 6. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. Today we are going to apply the financial modeling on the cash flows that we will develop. In the previous lecture, we have developed the cash flows that include the cash inflows, cash outflows from operations and from non-operations, and also calculated the net cash flows and starting and the ending cash. First of all, in this session, we will develop the projected cash flows for 8 years, considering revenue will increase by 30% and expenses will increase by 10%. Expected rent expense that will be increased by 25% after every 3 years as per the agreement. Uh, the 10% increase in expenses seems to be a lower side, but if you have considered the impact of the depreciation expense, that is a non-cash expense, it will increase its percentage. And secondly, the depreciation expense will reduce after first 3 years, and thereafter it will fully eliminated after 5 years. And we are expecting there will be no further capital expenditure. These cash flows are here that we are going to calculate on our Excel sheet. You should have familiarity with the concept of capital budgeting technique. Capital budgeting is a method of estimating the financial viability of a capital investment over the life of the investment. Here, the life of investment we have considered for 8 years. Secondly, capital budgeting focus on the cash flows rather than profit. Capital budgeting involves identifying the cash inflows, cash outflows from the investment. Thereafter, capital budgeting analysis methods include the payback period, discounted payment period, net present value, profitability index, internal rate of return, modified internal rate of return. Here we are going to apply only payback period, net present value, and internal rate of return. That help us to compare the viability of two projects that you have in your mind, or maybe more, to compare that with one is more viable to start. Here we have chosen a dental clinic. Now you should have the familiarity with the concept. What do you mean by the payback period? Period required to return on an investment to repay the total initial investment. Like in this case, your total initial investment is about 56 lakh. That after how much period the business will repay you this investment. Secondly, net present value is the difference between what an investment cost you and its present value. Cost means you have a expected return. Here we are considering 16% as a expected return, and it's different from the present value. If it is positive, it means your earning is more than 16%. If it's negative, it means your return from the business is less than 16%. Internal rate of return measure the rate of an investment, what we are exactly earning from our business. It gives us that picture. Now we are going to calculate all these values on Excel sheet. In the previous lecture, we have calculated the all type of monthly inflows from our business for the first year. Here we have the outflows for the first year. These are from the operations. And here we have the starting cash. And here we have the non-operational inflows. And here we have non-operational outflows, that is zero in this case. So here we have the ending cash. That is starting cash minus net of inflows and outflows difference. During the first year, we have the deficit for 946,700. Now, on the basis of our assumption, we are going to calculate the 8 years inflows and 8 years outflows for operational activity and the non-operational activity, and also calculated the ending cash. Now these are the cash flows for 8 years. On the basis of these cash flows, we are going to calculate the, first of all, payback period. First year cash flow, accumulated cash flow is the same. Second year means first year cash flow plus second year cash flows. It's in negative. Although we have the positive cash flow for the third year, but the accumulated cash flow still remain the negative till 4 years. From the fifth year, it starts becoming positive. And here we have the payback period, because our initial investment is 56,16,600. So the payback period is more than 5 years and less than 6 years. What's the exact value of payback period? We have the base year. We have considered base year as fifth year. Here we have the figure for the base year for both cases. Here we have taken the difference from our initial investment, that comes 37,18,973. Here we have the difference between the fifth year cash and the 6-year cash. On the basis of that, we are going to calculate the payback period. Payback period is naturally more than 5 years and less than 6 years. Here we are going to calculate the value. First of all, face value. Divided by this value. You always have the difference from the initial investment value as numerator, and you will multiply by this by the number of years, days in number of years. It comes 328 days. It comes almost equivalent to 6 years. So about 6 years is our payback period. Now we are going to calculate the net present value. Here we have considered our expected return equal to 16%. So you can change according to your expectation. Now we are going to calculate the net present value. Move towards formula. Here we have the financials. Here you can see net present value. So it's the net present value. First of all, you will enter the rate. Thereafter, values. It comes from 0 year to 8 years. And you will simply, now the value is positive. It means your return is more than your expected return, that's 16%. If the value comes negative, it means your return will be less than 16%. Now, internal rate of return tells us the actual return from the business. Again, move towards financial. Here we are going to calculate the IRR. Here is IRR. In case of a IRR, you will simply give the range to all cash flows from 0 to 8 years. So the IRR is 20.71%. It means your business is paying you annual return equal to 20.71% for a period of 8 years. Now it depends on you, either you feel viable with this return or not. If you have any other business option, so you can go for the similar calculation and use this template for any type of the business of your choice. Thank you very much. See you again with the new upcoming concept.